Okay, Record's video on Monday, the 19th of July, 2021. Well, that was one heck of a day. I do hope you traded it well. I took profits on my short positions. I was short E-mini, short crude, short Aussie. And when I woke up early Hawaii, my time, as soon as the blue professional bars came in, I jumped out. So let me show you what I was seeing on my charts and why I'm wondering whether I'm out a little bit too early. But anyway, so this is the crude trade, 8400 tip bar chart. Been short crude since about 72 up here, and I like this one for a stair-step trade. Talked about this on Friday's video, I think it was, when the blue professional bars kind of came in here. Early in this move, we had this signal kind of coming on the triples. So we'd had exhaustion buy, bearish divergence. We had blue professional bars at the high. We had cyclically overbought. And when everything kind of came together, we had this beautiful little triple signal. Punched up through 76, didn't change trend until all of those bars kind of turned white. And that was where we had a signal to go short. And I was saying this was the exhaustion sell signal getting the move going. So I'm not looking for this as a bullish divergence to end the move. That's just getting the move going. And then we had this retracement. A whole bunch of blue professional bars kind of come in here. They're shorting it at 74. We drop through the lows of that and we start signaling down. And this was the perfect little entry. So I've been short a little bit earlier than that. But when the blue professional bars kind of came in there, I felt pretty confident about that. That's a stair-step trade where we stair-step the trailing stop down. So when bullish divergence came in and the blue professional bars on the E-mini came in on this move, I'm out. So that was a super nice trade to the downside, but we have not seen blue professional bars kind of down here. It's been fussy around the 66 level and seemingly might kind of bounce a little bit, but we didn't see blue professional bars kind of on the way down here. So I think it's possible I'm out too early, but I find it really difficult to hold through that kind of a junky move down at the bottom. And a similar picture on the Aussie dollar. So I've been short the Aussie dollar. Not sure where my signals were. Been short about 75-ish or so. And holding into this last move. The Aussie dollar's been a little bit junky on the way down, but none of these reversal signals worked out at all. And I had a strong short bias because of this chart on the daily chart on the Aussie. So we'd come up into these highs at 80 tested, and here we had more cyclical resistance at that point, another signal down, and on the daily chart we were in a downtrend. So I've had this kind of short bias on the Aussie the whole time. But it's been difficult to get into decent trades. I think it's the third time into this Aussie dollar trade. The others have been fairly kind of small, either winners or break-even trades. This one was a nice one, but again, under the lip kind of trade here, resumption of the downtrend, but no blue professional bars. So, I still got this medium to longish term, kind of bearish view on the Aussie dollar because of this daily chart, and I jumped out because all of my risk off signals were kind of saying, just take profits and be done with it for the time being and just wait and see. But it could be way too early on that. And the third one was E-mini. Now, I had a nice short trade on the E-mini on Friday, and I said I wasn't going to hold the E-mini over the weekend, and I didn't. But as soon as Sunday evening kind of opened up, we were weak. So I got short at 43.02, something like that, in this move down here. And then didn't have a target on it, just had a stop on it. Similar signal to the crude trade. This is a stair-step trade on the way down. You can see the way Pro-Am trails the stop down. A whole bunch of blue professional bars kind of come in here. Again, similar to this crude trade, it's like this is the exhaustion cell getting the move going. This is the stair step as a confirmation kind of that we're in a downtrend and we just sink 70 points to the low, and that's where I got out when the blue professional bars kind of came in. Bang, I'm done there. So what we've had subsequently is no exhaustion sell on the downside. Yeah, blue professional bars kind of come in here and here, and this all this activity in the last 45 minutes of trade of the day was short covering rally, and that's what's triggered these exhaustion buy signals. So as we started to break trailing stops, whatever, that signaled this short covering rally here, which kind of figures in quite a lot of volume kind of coming in as all of those trades kind of taken out. So it's not a classic bottom. I mean, we've got cyclical support coming in, better sine wave here. That's what the background in red shows. We've got blue professional bars, and we've broken above the highs of that, so we've triggered better pro-am trailing stop there, but no exhaustion sell on the way down. So I know it's difficult to imagine, but the downtrend for me, rule-based, is not in, because we've not seen those exhaustion sell blue professional bars. So I suppose I'm waiting for another signal to kind of go short, but at the moment it's just nice to be out and flat and just be able to kind of sit back and see what's kind of going on. Have to say though, kind of big picture wise, this is not particularly nice at the moment. I'm not sure the top is in or anything as extreme as that, but just draw your attention to a couple of things. So this is the dollar INX. So that's the index, the S&P 500, kind of the raw index. And this is, last year we had huge sell-off. All the blue professional bars come in with exhaustion sell and bullish divergence, and they pick up those lows at a V reversal kind of down there, and we're off to the races. And sometimes markets top with exhaustion buying and blue professional bars into those highs in a kind of blow-off move. But they often, the other way that they can kind of top out is just a lack of energy and juice. And that's what we've got this time around. Look at this whole series. What have we got? 8 there, Rambo patterns, amateur up bars into those highs, just showing that the amateurs are getting in. It's low average trade size. It's kind of late in the day. We'd had our exhaustion buy. We'd had a bearish divergence by the zero line. So I said, when we have it close to the zero line, wait for a flush pattern after that. And that's exactly what we got on Friday's trade. It was a flush signal went off. Different showing on those bars there. You can see the flush signal is on that Friday's bar, but it's shown here on this better momentum line. And I do that because you want to see what day the signal went off, and that's why it's there, and what peak it's referencing for the flush signal, which is that peak. So that's why they're on slightly different bars, but that was Friday's signal saying that we were kind of played out flush to the upside. So this is really important, and I always look at the lows of the Rambo pattern sequence to say, if we start breaking below the lows of that kind of Rambo sequence up there, that shows kind of where the weakness is. That being said, we have not done damage on better sine wave on this kind of big chart. So we've overshot resistance on the daily chart here. That's what we're above. But we're above resistance on the intermediate time frame. We are above resistance on the highest time frame. So all we've done is just overshot a resistance and kind of come back. So we could see a few days kind of weakness potentially, but we'll have another support coming on the daily time frame, and we'll test back up. And whether that's a pullback to end of trend signal, don't think so. If this kind of weakens, potentially that support level will come under that resistance, and we'll just have a support to resistance to play out. But in my mind, all of this energy has to play itself out. It has to go pullback end of trend on the intermediate time frame. And so I think we're going to have to sit through some days and weeks of just backwards and forwards oscillating until these things play itself out. I don't think it's going to be just a sharp kind of decline at that point. Having said that, though, we've got weakness in these other markets. So the things that I'm looking at, the things that go first, where we see the weakness first, is the high beta type equities market. So EEM is the emerging market ETF. And you can see here we've had exhaustion buy, bearish divergence, blue professional bars. We're sitting right on that trailing stop on better pro-am, and we've got weakness here. We're in a downtrend, and we're also cyclically overbought at that point. As soon as we break through 51.50 there, that's going to signal a triple signal to kind of take us into a downtrend, similar to exhaustion sell, bullish divergence, blue professional bars. I mean, this trailing stop was not great in terms of trailing that. The move was such a V reversal. We trailed that all the way up here, but we had strength all the way from that break on the emerging markets here. But emerging markets is one of those kind of high beta equities situation where it tends to break first. So that break in EEM is coming up. We've also got the Russell again. The Russell 2000 tends to be high beta, tends to break first. When we're led to the upside, it tends to be things like the NASDAQ and potentially the Dow kind of holds us first, and then the Russell kind of joins in. And then on the flip side, when we're starting to weaken, we'll get the weakness in the Russell first, and then followed eventually by the Dow. The NASDAQ will be quick to follow, and then the S&P, and kind of lastly the Dow. Not sure those are rules that you can trade from kind of absolutely, but it's just worth noting that some of these equities indices become weaker and stronger than others at different times, and we're seeing this. This is a classic killing field setup where the professionals pushed it up into those highs, using their volume to get the market going, and they've been getting short during this sequence. We'll know if we get a break below that support at 2078, so that'll be kind of confirmation that was a killing fields kind of zone. But it's interesting that we've held today at that point and rallied back a little bit, so it could be that we're just going to fuss around somewhat. The other one that was interesting to me, HYG, which is junk bond market, the high yield corporate debt market, that got kind of slayed today, and we'd just broken back above this trailing stop on Breda Pro-Am here with all this strength that we've had, and that was the first kind of seriously weak bar that we've had for a couple of months now. So those things can show us the way, but I'm not sure on the equities indices that that was as important as it felt today. I think we're going to fuss around a little bit before the absolute kind of change in trend happens. But it was a good day. Hope you traded it well. I'm looking for kind of re-entries, but I'm flat at the moment. Just see what happens next.